Well, g'day there, everybody around the world. It is James on behalf of Pivot Point Trading. I'm just bringing you a very quick pre-market update, sort of an intermarket relationship between the US dollar, gold, and silver as we round out the month of trading for August 2016. Yes, as at the close on Wednesday, it is dated the 31st of August. We will be moving into the first trading session for the month of September. With this new month of trading, there is a little bit of opportunity. That is what I'm going to speak to you about here in this very brief pre-market update for, again, the 31st of August. Now, a very common sort of intermarket relationship is between the US dollar and, of course, the strength of commodity markets. What I want you to understand right now is that since about December, even January 2015, we have been in this sideways consolidational type of pattern. In fact, it is what we call a sideways channel. All we are doing right now in the US dollar is oscillating between macro support, which is highlighted down here on my screen with the color red, or that red line going horizontally between 94, and of course resistance, which is again that horizontal line up here around that 100 area. Let me just color code this for you. Let me bring up the blue pen, and you can see right here we're making a series of waves back and forth. Now on some of these waves we haven't made it all the way up to resistance, and again on some of the pushes lower we have seen some intermediate bounces, but on a whole we are setting up a relatively nice channel. What I need you to identify is that obviously we are back down around this 94 area. In fact, we bounced very, very quickly off from that area. And since about May 2016, we have been putting in higher lows. Now, these higher lows, they're not all that important. They're not really telling us that, look, a trend is about to begin. But it is relatively interesting given that we are moving sideways. And the last time we put in some form of relative higher low, all right, we generally oscillated back up into resistance, was right up here, back up around those highs, or those historical resistance highs since 2015, which is coming back up here on that 100 area. Now, what does this mean for us? Now, firstly, what I will say is that in full transparency and in full disclosure, I am not in any long trades on the US dollar at our trigger at 95.21. Obviously, you can trade UUP. That is a very nice sort of underlying market or an index, a derivative that you can trade if you want to have exposure to either, again, price appreciation or depreciation in the dollar index traded against a collection of counter currencies. What I'm most sort of focused on at the moment is how this relationship, and if in fact the US dollar cycles back up to 100, what does that mean for some of the commodities which we follow? Not only oil, which again has taken a little bit of a beating in the recent or in the past couple of days, but also gold and silver. And this is where the opportunity starts, or is at least presenting itself for the month, the beginning of September 2016. Now, I'm not arguing whatsoever that since 2016, silver and also gold have been putting in a series of higher lows, which is relatively bullish. It does symbolize that of a bullish trend. However, most recently, we have seen again a parabolic blow-off type of top. We're actually getting a rounding top on the weekly chart, and we have a very interesting gap in the opposite direction. Now, if we expect the price of the US dollar again to appreciate as we move into the month of September, well, what that generally means is, again, with this intermarket relationship, is that some of the commodity markets should be under a little bit of pressure, and as a result, sell off relatively speaking. Now, if we're looking at tradable opportunity in silver, we have to check with the chart and ask ourselves the question, well, is there an opportunity for a short given the technical picture? And that answer, or at least the answer to that question, is yes, there is, because when we go into, I guess, the nitty gritty of the chart, it does appear as though we have what we call a double top. We have a very pronounced neckline, and we are more or less sitting right on that open window, which is just filled. We are also below the key exponential moving averages, and also going back to the trend line since the beginning of 2016, again, setting up those higher lows, which is very much so bullish. There is potentially an opportunity for silver, which is trading at $17.67 an ounce on the ETF, to move all the way back down to about $16.50. That is the projection based, obviously where we're currently trading. If in fact we move sideways and then we start to see the sell-off or the break of that support, well, obviously that target level is going to move up, and it's going to move up with our extension of what appears to be a bullish trend, a primary trend, a trend reversal, which is in effect at the moment. Now, that's largely debatable, but given the technical picture, the short-term picture since 2016, we have been putting in higher highs also. And if I zoom out a little bit for you, you can see that we've actually taken out some of the swing highs, the macro swing highs, which were defining the bearish trend all the way through to September 2015. So we'll see whether or not this is a legitimate and also sustainable move in silver. That will sort of be decided, or at least disclosed to us or revealed to us once we interact once again with this trend line, if in fact we see a little bit of pressure flow into commodities markets based off, again, the strength that we assume is going to set up and continue with the price of the US dollar. With gold, however, there isn't as much of a tradable opportunity. Again, if I look at this technical picture, now I'm not sure where my trend line has gone. I might just need to bring it up on the weekly chart for you. I'll just bring up the trend line right here and I'll just draw off from these lows. We're very close to it. I was just looking at this earlier, and I'm not sure where the actual trend line has gone, so I've just had to draw it in again myself. But if I just connect these dots, or at least the beginnings of this trend, you can see again consecutive higher lows, which is very important. But the drop we're looking at is only coming down to about 122, 124. So gold may stop the sell-off prematurely relative to that of silver. I believe silver has a little bit further to fall relative to gold based on some of these quite aggressive trend lines. But again, you can simply sort of draw a box on your chart and say to yourself, well, I'm still bullish on gold and I'm still bullish on silver up until this trend line is broken. So, best displayed again outside of gold is that, look, we've got a target area of where price may intermediately sell off into. If it holds this area in the future at some future date, well, then it will turn into potentially a long-term buying opportunity. But we'll have to reassess our outlook on silver and on gold if in fact they break down from these levels. I'm not calling for it again first thing to happen on Wednesday or even this week. It may take a number of weeks to happen. But what I'll be doing is keeping a very close eye on these commodity markets, keeping a very close eye on that US dollar, because I do believe personally that the US dollar is going to oscillate back up to that 100 area. And then, of course, this is most likely going to, once again, at that particular time, once we get there, set up a relatively neutral trade in that we're going to roll back over and oscillate back down to support and continue the sideways trend, which we've been stuck in for about 1.5 years. Or if we are finally going to see an end of this consolidation on the US dollar, I'll change my chart so you can see this a little bit nicer. Maybe if I go to a weekly chart, it will look less messy. Maybe I can bring up the candlesticks actually, but you can see this for yourself. And really possibility number 2 is that we get back up to this 100 area, and instead of rolling over, in fact, we just continue to break out and push on up towards, and I will show you this very quickly, my long-term target on the US dollar, which is coming in right up here about 115, 113 at the moment. So that adds on another 13% in terms of upward price sort of, projections for the price of the US dollar until we start hitting that long-term macro resistance area, which is sort of shown up in this downward trend. Very, very interesting downward trend, which is all of the data we have going back to 1985. So very interesting longer-term type of pattern on the US dollar. But as for that, I've said everything I've wanted to say. Again, I'm not in the US dollar in the trade. I'm not in UUP. It is something that I've been speaking about though. And it actually triggered on Friday last week with this really nice candlestick off from that support area. And it is expected, and I've been speaking about the US dollar, is that we need to recognize and acknowledge that it is still bullish. We are in a bullish trend. We're just simply consolidating a lot of those gains, which happened very quickly during that ramp up. And until the support area breaks, we still need to, I guess, have a look, or at least have an outlook on the US dollar as being positive, as it, as we expect it to, again, to continue to appreciate in purchasing power relative, or at least counter to other currencies and also commodities. All right. So having said that, have a fantastic trading day on Wednesday. It is the final trading session for the month of August. I'll be back with you. I'm not sure if I'll bring you a video tomorrow. I'll see what the market does. Today there were 2 videos, which is somewhat rare recently for me. But again, it's important to sort of highlight some of the beginnings, at least, of some potentially big moves, which may or may not shock some people depending on how, I guess, up to date they are with charts and how closely they follow financial markets. So enjoy, everybody. I'll see you again soon. I'll speak to you again soon. All the best. This is James signing off on behalf of Pivot Point Trading. Goodbye.